Welcome back to Cash Flow Confidence Live, where financial pros learn to become fearless cash flow and profit advisors. I'm David Saphir, here to help you close the clarity gap and grow your advisory impact. Please subscribe below and follow the show so you'll never miss an episode. Let's get started. Today, great topic. This is the problem when cash basis or accrual basis accounting just isn't enough. Why isn't it enough? Because accounting was not designed for cash flow management. If it was designed for cash flow management, we wouldn't have so many small businesses failing due to cash flow challenges. We have failing businesses that are profitable that don't have enough cash. And that's the problem we're trying to solve for. So, will cash basis accounting or any type of accounting be able to solve cash flow confusion? It helps if you switch to cash, but it doesn't truly close the clarity gap. And cash basis accounting is still historic reporting. Cash flow is forward looking, and it's forward looking management and making decisions, not just reading the past. Example number one, your cash basis P&L provides a concept of revenue. And I say concept of revenue because that doesn't necessarily mean deposits into the bank, and the accounting concept of expenses. Why is it a concept? Because we know that there's cash leaving a bank account that doesn't show up as an expense. Inventory purchases doesn't show up as an expense until it's sold. Repayment of loan capital, the interest shows up as an expense, not the capital. And an owner's distribution, whether it's going in or coming out, doesn't show up on a standard report, except for if you go, wait a minute, the statement of cash flows covers that. Yeah, that's a train wreck. I have a hard time understanding it. Most people do. They have to relearn it unless you're using it all the time. And I've tried explaining it to business owners, and it really is a whole different world of thinking. It is not intuitive, and business owners should not have to learn accounting. They should have a better system. But they have profit on the brain, and they relate profit to seeing cash. That's how they think, whether you want them to or not. That's reality. Yeah, and a balance sheet can show them how much cash they have in the bank, but it's just for today. It's just, or whatever date that was. Usually it's not today. Usually it's a week, 2 weeks, a month in the past. So they are looking backwards instead of looking forwards when they're looking at accounting reports. By its very nature, accounting is historic. I was working with a client that does retail, and they use cash basis because it's simpler. Yes, it is. And there are beautiful reports, a P&L, a balance sheet. They knew exactly what their accounting expenses and revenue were. It was great, right? Perfect. That's exactly what your ideal is. It's built to provide it on a timely basis. It was accurate. It provided timely basis. But every December, they nearly missed payroll. Why? Because they were putting cash into inventory to buying it, and it was tied up. And it took time to get it back out. In early December, they were still making the sales and getting rid of and selling off the inventory. You get the idea. They were steering their business through the rearview mirror called accounting. They didn't need better accounting. They didn't need better bookkeeping. They needed a 13-week cash flow model so they could forecast what their balances would be and be able to do something about it, not just see that it was coming. They knew it was coming, but they didn't know how much or what the impact of different actions would be. So that's what they needed, is a model that they can say, okay, what if we got a loan? How much of a loan do we need to have? How much of a line of credit? Whatever it was, they were able to deal with it. Cash basis, accrual basis accounting tells you what happened to your expenses, not to your cash, unless you really dig into it deep. Cash flow management starts out with modeling, and that shows you what is going to happen to cash, and it's very clear and obvious. So let's talk about some additional fundamental differences between accounting and cash flow management. The historic versus the predictive nature of the two, of the one historic on the accounting side. Either way, it reports what happened last week, last month, last year. This is what happened to your money. This is what money came in and out. But again, it's theoretical because revenue might be recorded, but if you didn't get paid the invoice, you've got to reverse it. That's confusing. All of this stuff adds to the confusion. As opposed to cash flow, it's forward looking and what will happen in the future. You get to forecast what happens next week, next month, next quarter, or maybe even in a year or 5 years. I'll tell you about a 5-year forecast I did a little bit later in the show. It's forward working, looking, where is the cash going? Where is it going to be coming from? And then it allows you to say, what additional expenses, investments can we make? And will there be problems and when? Well, we all know there's going to be a problem sometime or another in almost every business, but it's when, and getting some visibility before it hits. So cash accounting is like an autopsy. It tells you what the patient died of. All right, let's use something better. It's like a medical report. It tells you what the patient is suffering from or dealing with. Cash flow forecasting is like preventive medicine or curative medicine, that you're saying, do this for a better future. Let me give you an example of this one. A contractor, great set of books. I knew the accountant personally, really clean, but they were continually in a cash flow crunch. Why? Simple. It was simple to discover once we dug into it a little bit. Their terms were net 30. Did their clients pay net 30? No. Clients almost never pay net 30 or net 15 or whatever it is. If you give them terms, there will always be clients who take more time. And one of their major clients was out 45 to 60 days. It screwed up their entire receivable. But it showed revenue on the reports, right? They invoiced $500,000. That is revenue on the P&L. But the cash didn't come in. And they were a growing concern, so they were always behind. The 13-week cash flow model showed them exactly what the problems were, how much a shortage was, and we were able to go get them a loan based on the modeling that we did and showing the bank how it would bridge the gap of their projects. So here's difference number 2. Difference number 2, what versus why and when. Here's the accounting view. It's what's going on. Here's the taxonomy. We've got income at the top. Then you've got cost of goods sold that gives you margin. You've got operating expenses. So therefore, there's your net margin. And then you've got taxes, other income, other expenses. So the question is, what type of expense is this? And you get a chart of accounts based on trying to figure out the types of expenses and putting them together. When you're working with cash flow management, you can mirror your chart of accounts. That is one way to do it. But there's another way which often mirrors timing patterns. How often or frequently does money come in or go out? Are payments made weekly, biweekly, monthly, quarterly, annually, random? That can be a better way to group it for a management issue. The big thing you can ask yourself is, when the cash leaves, do we have control over it? Yes or no? If not, you put that into a fixed cost that literally it's coming out of your bank account at the same time every week. Now, that's something you might want to stop doing if you can, so you can actually manage it and send the bill out a day or two later, or send out a check or pay it with a credit card later or sooner. That's a different issue for a different time. The point is, timing is a huge part of cash flow that it's just not when you're getting monthly reports for your accounting. So let's move on to point number 3, the purpose. Reporting versus planning and controls. Reporting is designed, the accounting, for tax preparation, compliance, financial statement accuracy if you've got investors, as opposed to cash is for making decisions. As a matter of fact, I used to only do accounting once a year. I still run my business on a cash flow forecast. I now do my books every year because we're getting, not every year, every month, we're getting bigger. I want to know results month to month that are on an accounting basis results because of tax issues, where before we were running just over break even, possibly a little loss, possibly a little profit, but we weren't worried about the tax consequences. Now we are. So I only did it once a year. Perfectly good. Well, how could I do that sanely? Because I had a cash flow model that told me and predicted how much money I would have in the bank or how much money I wouldn't have. So I had to invest in the company. It was easy to do. I don't recommend that. And we generally don't work with companies that are that small, but it is feasible. And that's the purpose of accounting, taxes, and be able to report. And I've got a partner that I want to be able to report. So we're doing monthly bookkeeping now. Cash flow management, on the other hand, it's day to day or week to week, depending on how much cash you have in the bank and what your cycles are for sales and your cycles are for customer deliveries. Weekly is a minimum. Why weekly? Because you do not get paid once a month. You do not pay bills once a month. It happens regularly. You have expenses regularly. You have expenses during the week. And it can be so misleading. Everybody who's listening to this has a background in finance, accounting, some way or another. So you've probably seen a company that says, wow, look, they've got, let's call it $100,000 in the bank at the beginning of the month and $150,000 at the end of the month. That must be a great month, right? Well, maybe, maybe not. Why do I say it like that? Because it's possible in between the two, they lost, they ended up spending a lot of cash, and therefore they had deficits at some point. They could have bounced checks. They could have had to borrow money in between those two bank balances because you've got anywhere between 28 and 31 days. So that's why weekly is so important, because you see the micro level and you see the day-to-day on a weekly. And sometimes when I've worked with customers who are really tight, we literally do cash flow forecasting on a day-to-day basis and look at balances at the beginning of every day, end of every day. What can we spend? What do we expect coming in the next day, et cetera? And literally you live on deposits going in and coming out constantly, day after day after day. It's not a great way to, it's terrible. It's stressful. And I wasn't the business owner, but it's stressful for everyone involved because you end up with deadlines, et cetera. But that's what you need to do to make decisions. That's where cash flow forecasting, cash flow management comes in. It helps you make decisions. What should we be doing next? What can we do to invest in the company? So you're shifting. When you're doing cash flow advisory, you're not just doing the accurate and timely reporting of what happened. You're helping clients see what's coming in and then plan for that and make proactive decisions on what should be going out. Your cash basis accounting, your accrual basis accounting, it's like a flight recorder in an airplane. And cash management is like the control tower saying, steer a little bit to the left because you're going to be hitting a headwind or a crosswind. And to go straight, you're going to have to veer left or veer right or go up above the clouds or go around a thunderstorm. That's what cash management allows you to do, is deal with the weather today as you're flying the airplane. So some of the things I sometimes hear from people that I'm talking to, people, accountants call me and say, "Hey, David, I'm thinking about doing this, but I already do cash basis accounting, and that sort of mirrors when the cash is coming in and going out." I said, "Well, we go over some of this stuff, and we talk about those three key examples: inventory, return of capital, and the owner's contributions coming in and out." Completely blows up this theory that cash basis accounting reflects reality accurately. It doesn't, not on a P&L level. Again, you have to put everything together. So it's powerful accounting, but it's not advisory work. Number two, the second thing that accountants will talk to me about is, well, my clients barely look at the reports now, so why would they care about cash flow forecasting? Well, it could be they're not looking at the reports now because that doesn't help them take action. It could be they are not looking at the reports now because they do not understand them. How long does it take the average accountant to grasp accounting principles, to grasp what a P&L is and what a balance sheet is? It's at least a full semester at a college course, Accounting 101. And it is not an easy course. There's a lot of people who drop out. I was one of them. I just dropped it after about, a few weeks the first time. I got an okay mark the second time, not good enough for graduate school. So I had to take it a third time, and I finally got it. How should we expect small business owners to be able to understand accounting when it takes time and effort to learn it? They should be running a business, and that's why they look at cash flow statements. That's why they'll ask questions. That's why, because they can run the business on a cash flow model and understand what are the actions they need to take. I am working with a client now that was in rough shape. And I said, I'm not sure if I can help you or not, but I'll run a model and we can see what things look like. Well, I did that. It took a week and we got together again. I said, all right, this is what it looks like. And we talked about it. It was a 2-hour conversation. They had tons of questions, the two business owners, and they asked question after question after question. I didn't have to explain very much. I just explained that's the beginning balance, and those are all the income and the expenses, and that's your ending balance. Move it to the next week. And, it's just easy like that. So we left it as like, let me know if you want additional help, back and forth, and said, yes, we want additional help. The next week, we got on our first phone call to do some coaching work. And the key operating owner said, David, we had the best week we've had in such a long time. It's like, whoa, what happened? It was a mindset shift. Using that cash flow model and asking the questions that he asked, he was able to see things that he could do. And he talked to a couple of key people in the business and said, listen, we are looking to get cash in as quickly as possible. And it was an auto repair. So instead of spreading these jobs out, let's figure out which ones are expensive that we can get done today. Get it done today. Get it done tomorrow. Get it done before the end of the week. And just by focus, and also being a little bit more aggressive with sales, saying it's under warranty. We can help deal with your warranty company. Let's sit down and do it right now. Would you like me to help you work with your warranty company, your insurance company? Everyone who says, who's asked the question, do you want help with your insurance company? Says yes. So just by realizing that by shortening the sales cycles, that's the second thing they did, shortening the repair cycles, shortening the sales cycles, they had their best week ever. And we didn't even start coaching. It was because of the clarity that they got from doing a model. And they always had P&Ls. I was working with their bookkeeper. She did a good job of doing accurate, timely bookkeeping. But she referred me to them because she knew that they needed more. All right. Number 3 that people say is, I don't have time to add another service. I'm already stretched really thin with compliance work, tax work, or accounting and bookkeeping. And so I get it. And this is not for everybody. This is learning a new skill set. But so often people are drowning in tax returns and closing monthly work. It's because they're looking at volume. And when you're doing advisory work, you're able to work with fewer customers, fewer clients, but more per client. $1,500, let's drop to $1,000 to $3,000 for a small business. We're talking $1 million to $10 million in revenue. That's what they'll pay, is $1,000 to $3,000 a month for advisory work. And most accountants are hitting a ceiling at about $1,000 for accounting work. Now, maybe it's a bigger client, but then if it's a bigger client, you can charge more for advisory. The point is this: the people who work with my program, and I do not coach how to improve your business per se, I teach advisory. But what they start realizing is they drop their smaller clients. They drop the clients that are costing them 80% of their time for 20% of the revenue, and replacing it with larger clients that want the advisory work because A, they can help them, B, they find more satisfaction out of it, but C, fundamentally, they want to help their clients. And it goes beyond accounting. Advisory can actually make a direct impact, and it's not in months and years. I was just looking at an old dashboard I put together, just a simple dashboard for a client. We were looking at it together. They don't know who the client is, but we looked at it. It was a 4-week dashboard. That's it. That's as long as I worked with that client. It was very intense, full-time, but huge changes in accounts receivable, significant changes in old dead inventory, and the other metrics that were key to that business we saw in just 1 month. And it was week 1 that we started seeing the initial results, and then they were accelerating. This is fun stuff. When your client comes back and says, wow, you're making a difference in my life. Not very many people say, wow, your reports are awesome. Now, it's not an ego thing. It's just, that's my goal in my life, is to help more clients. And those are the people who end up working with me, as they want to help Main Street companies thrive and stop going out of business. The perfectly good companies that are going out of business because they don't have the cash. They don't have the cash, and they end up in a downward cash spiral. All right. So the next one is like, well, what kind of sophisticated software do you use, David? What's the best package you found? You know what? Small businesses like this, it's a spreadsheet model, and it can be a 1-page spreadsheet model for some. The one that had the best week ever, 2-page spreadsheet model. That was it. And the second page wasn't necessary because it was attached to a savings or an equity line, or not equity, but a credit line. So it was just 1-page model. That's all you need. If it gets more sophisticated, fine. It can. And I'll tell you about, I forgot the 1 to 5 year forecast. This was a client that did large construction projects, and they got what's called retention, money back, their last payment up to 5 years out, because they were doing roads and an infrastructure went in, and then houses were built or office buildings. And then when that was all done, and they were 3 to 5 year projects, they would get their last payment of 5 to 10%. So they had to go out that far. And we created a cash flow model. And the challenge they had was, it wasn't adding one employee. If they wanted to grow, they had teams, and they had 2 teams, and it included, I think, if I remember correctly, 5 people, but also equipment that was expensive. And so it was all or nothing. Do you have 5 more people with all the expense of the equipment, or do you just wait? Long story short, we set up the model. It took a month or 2 to really hone in on it. And at the end of the engagement, and I don't do the accounting, but again, an accountant brought me in. The end of the engagement, the owner said, David, I wish I'd met you 5 years ago. I could have grown the company much faster. This guy's really conservative. He was very concerned about growing too quickly and running out of money, which is a smart thing. Growth eats cash. It's a topic for another day. So that is where we did a 5-year forecast, and it was a huge impact on this client. Okay, so here's some action steps you can take this week. You ready for this? Write it down or rewind it if you need to. Number one, think about your client conversations you've had. Do you have clients that you know are having cash flow problems? They're not going to say, hey, I've got a cash flow problem. What you'll hear is, I'm having trouble making payroll, or I don't know how I'm going to afford the inventory that I need, or we've got bonuses coming up. I want to give bonuses, but I'm not sure I can afford them. That's the type of language they'll use. Have you heard that? Figure it out, write down a couple of them. And then number 2 is build a 13-week cash flow model for somebody. Do it for free. If you've never done it before, if you go, I don't know what I'm doing, so you can build it on your own. There's lots of models out there. And if you don't have a model, I'll give you mine. I don't care. That's not the issue. It's not the model. It's what's between your ears and what's in your brain and how you deal with the information. That's the important thing. And give it a shot. Why? Because you'll see whether or not you know how to do it and how much you enjoy doing it. And then you could go talk to the client and say, this is what I did for you. Hey, listen, looks like you're going to be in trouble in 2 weeks, or this is how big the gap is, or don't worry about it. You're perfectly fine. Go ahead and spend that money on the inventory or hire that new person. Whatever it is, you get to have a conversation. You will build confidence. And when you do it for free, there's no expectation. Or maybe you've got a client who say, yeah, I'll give you some money. And you're going, well, I don't know how much I can charge for it. Doesn't matter. You're getting paid to learn. That's a great way to get started, whatever the amount is. Finally, to get started, if you really want to do this and you want to do it fast, partner with a cash flow specialist. If you don't know one, get in touch with me. I'll listen to what the needs of your client are, and I'll match you with somebody who's been in my program and's graduated and knows what they're doing. Or maybe the best option is for them to work with me, depending on what their needs are, etc. Or if you go, no, David, I just want to work with you. It doesn't really matter. My concern is getting help for clients who are in cash flow situations. By the way, those people who say we'll get you money overnight, $100,000 overnight, no credit check, yeah, run away from them. It's called an MCA loan, and it will get you in trouble, your client in trouble, faster than you could ever imagine. Okay, so let's wrap up. We're heading to the end of the half hour. Thank you for being here today. If you've made it this far, obviously you've got some interest in the topic. I hope you found today's episode valuable and that you're inspired to improve and continue growing your advisory skills. If you haven't done so already, again, click and like this. It depends on what platform you're listening on, but follow me. And so you can get this every week. There's a new broadcast with new information. I'm trying to teach everything I know, literally everything I know. You stick around and you can learn it. Now, I'd love to hear from you and tell me about what's going right, what topics you're getting stuck on, or if you've got a client issue, and who knows, maybe that'll be the topic of the next show. If you need additional resources, go to, and depending on what platform you're listening to this on, go to cashesclear.com, or I forgot to mention the sponsor, so I'm going to mention it now. Pivot 2026. If you like what we're doing here and you want a quick way to start learning and kick this off, come to Pivot. The website is Pivot, Pivot, 2026.com. Or shoot me an email, david@davidsaphir.com, and you can find me. I'm very out there. Send me a message if you need to. If you want to talk about it, come. It's a 4-day live, in person, half day intense learning, and half a day to sit back and say, how do I absorb this? How do I learn the material? How do I incorporate it into my business? You'll leave absorbing and having a plan, not just overwhelmed. May 2026, Pivot 2026.com. And I'll look forward to seeing you there, hopefully. Or if you're just saying, David, nope, I want to learn something sooner than May, again, get in touch with me and let's see if there's something that we've got that can help you out. Thank you for being here. It was a fast run today, but I loved being here. Hopefully you liked it even more. And until next time, keep building your confidence and delivering fearless cash flow advisory. I'm David Saphir, and this has been Cash Flow Confidence Live. See you next week.